Hello everyone, I'm Abdullah Rezwan, the host of your show Investrek. Today we have Mr. Ali Imam in our show. Ali Imam is the head of research in BRAC EPL Stock Brokerage. While he oversees the whole research division in BRAC EPL Stock Brokerage, he actively covers telecom sector in particular. He has more than 6 years of experience of investment research and management in Bangladesh. Before taking over the current role, he covered manufacturing, agribusiness, and service sector companies as investment analyst at International Finance Corporation, which is basically known as IFC, the private sector development arm of World Bank. He also worked as a generalist analyst in Eastern Bank's investment banking division for more than a year. Mr. Imam graduated from Department of Finance of University of Dhaka. He also earned the CFA charter holder in 2011. Let's start our discussion with Mr. Ali Imam. Ali bhai, thank you. Thank you for your time. We would definitely talk a lot about macroeconomy, telecom sector that you cover, and also delve into some miscellaneous stuffs in the end of the discussion. But to begin with, let's talk about the economy. We all know that recently the uniform VAT, uniform VAT that has been talked about for almost 3 years now, and it has been halted. And I would like to discuss the possible implications for halting the uniform VAT implementation on the fiscal side of the economy.
Thank you so much for the opportunity, Rizwan. So I'm not an expert on the VAT Act and its possible implication for individual business on the ground, but if you take a step back and let's focus on the macro side of things, and especially wearing the investment strategies hat, there are a few things that are apparently very clear. One is that the government's tax collection or revenue collection ability will take a dent because of this deferral of the VAT Act implementation, and their revenue target, they will miss their revenue targets. So the immediate impact that I can see is that the increased regulatory risk for the big cash industries such as telco and tobacco. We know a number of disputes are at various stage in the court, regarding different issues, and there are a number of claims from BTRC and from the NBR, and I think we will see the risk escalating in the next 1 and 2 years because of the deferral of the VAT Act implementation, because the government will try to get as much revenue as possible from other sources, because they will definitely miss the revenue target they had with VAT Act implementation case. So I think we'll see a number of regulatory settlement, especially in the telco and tobacco sector.
But they would still have to go through the legal process, and it may not settle in the next 1 to 2 years, and it will still create a dent in the fiscal side of the government.
Regulatory process wise, yes, that can take time, but I think there will be some initiatives being taken to settle these things amicably outside the court.
I see.
And that will ensure win-win situation, and this is my personal view on the whole thing, that we'll see the regulatory risk going up, and that will enforce a number of settlement of these regulatory charges going forward, which will bring in some high provisioning on the P&L, and our earnings may take some hit. And on the other side, we will also see a number of events to occur, such as the 4G auction and additional spectrum auction, things like that, which will help the government to source more revenue from, though
Right.
these are not really revenue from traditional perspective, but I think from fiscal management perspective, there will be these initiatives coming in the
This
next
can
1 year.
definitely ease the pressure.
Right. And the other thing is that if you look at the current status, I mean, this deferral is not just going to affect the business and investment scene just for 1 year. It's not just for this budget year, but the implication will stay for the next budget year also,
Right.
because the government made it clear that until the next election happens, they will not implement the VAT
So
Act.
the uniform VAT policy will not be implemented in the next fiscal year either.
Right. And with that not happening, we can expect that the uh, economic stimuli that generally comes in the form of different budgetary provisions, those will go missing in the next budget as well. For example, we have been hearing about corporate tax reduction in this year's budget. That did not happen because you see all the big things cannot happen all together, right?
Right.
So the corporate tax rate was not cut, and I think the chance for corporate tax rate reduction in the next budget is very thin, given that VAT Act implementation, which would help the government to collect more revenue. Um, no, I think the tax rate cut is not happening in the next budget as well, even though that is a pre-election budget.
Exactly.
Election. But on the other hand, the VAT Act that would bring the higher government income, that is not going to happen in the next 18 months at least. So with the difference, drawing, increasing over time, the only thing the government can think of is going for more debt, and which is very easy given the liquidity situation in the financial service sector. So I think the government borrowing will ramp up, and one single
And it
takeout
will
from
come mainly from the banking sector and not from the
it can come from both ends. So it can come from banking sector in the form of GSEC issuance, and it can also come from higher issuance of pension size schemes and things like that, which has already grown substantially. That can
Right.
continue well into the next year. So both these things can help the government tapping more resources for spending on important projects before the election. One thing I would like to highlight for us, I mean, for the stock market or for the capital market, I think I have spoken to many of my colleagues in different treasury offices, and the takeout I have is like interest rate has really bottomed out. So as government, if government ramps up the spending and borrowing as we are discussing right now, we would see interest rate to increase in a secular trend in the next 1 to 2 year horizon. So the falling rates that has been seriously in the concern for last 2 years. I mean, the real rates are negative. I think that disequilibrium will be addressed through that ramp up.
Right. Uh, where should the savings or excess funds be heading towards right now in Bangladesh? Should it be stocks? And if that is the case, why exactly?
I think capital market has a lot of room to attract more resources. So if you talk about the wealth accumulation scene of the country, this is phenomenal, and we as a country has a significant investment problem, not just from individual investors' perspective, but also from national, entity perspective. So if you talk about, we always talk about demographic dividend without understanding the obligation side of things. So the demographic dividend is not really a dividend. It has its own obligation. So for example, the population scientists always put it like that: China became great before they become rich, which was not the case for Japan. I mean, they become rich before they get old, right?
Right.
So it would be very important for us to see where we are heading in that particular matter.
Right.
So whether the country is becoming, whether the people in general is becoming wealthy before we are done with the harnessing of the demographic, so-called demographic dividend. Because if it doesn't happen that way, that will trigger a big negative social transformation that is already happening in my view. If you look at some important international headlines, the number of people going to different countries through illegal channels have increased significantly. I mean, Bangladesh is the largest source of illegal immigrant to European Union, which was discussed in last day's newspapers. These are not really the kind of social transformation. Living standard, and then they need to see that they have the hope of realizing the dreams they have. For example, we don't have the right kind of entrepreneurial perspective in the country at the moment, which is very important.
And the cost of
Our
doing business is pretty high.
pretty high, and then our education system is not really doing a great job transforming people's life, in terms of uh, how market economy would like it to work, right? So at the same time, the opportunity, if you compare the opportunities that people in general have in the in the developed part of the world, the gap is too much. I mean, for people to earn that much of money from in Bangladesh, it's not something they can really. These are not tangible dreams. Let just put it that way. So they think, and the other thing is that Rizwan, we have to understand the size of the problem we have. For example, our labor force is growing at 4% rate,
Right.
which is we have almost 2 to 3 million people joining the workforce every year. Unfortunately, we don't see that much of job created in our system every year that way, right? So a lot of people, they are not they are they don't have the right kind of job they want to do, right? So that triggers frustration, and from that desperation, people try to move out. So that, I think, social scientists can better talk about these things, but let's just focus on the problem we have. I think we are not doing enough in terms of employment generation. We are not doing enough in terms of distributing the sweet fruit of economic development towards the to in the rural areas. So most of the developments are rather urban centric and semi-urban centric, where top 20% people are mostly taking of all the benefits that are happening. If you talk about middle class, I mean, the cost of living has increased significantly. um, for example, I visited my village last day, and I found that the price of bricks, for example, basic home building material, right? So it was 8,500 taka for per 1,000 bricks just 3 months back, and now it's 11,000 taka.
Why? Is there a supply side
I don't know
problem?
the economic side of things, but I think this is all happening all together. So there were anticipation of VAT Act, and there were different other
Right.
catalysts for that. But the case has been so for all these years. For example, the rice price have increased significantly, right? So the cheapest kind of rice, we call it mota chal, is priced at 50 taka, which was just 30 taka a year back. So you can understand that the people at the bottom of the pyramid, they really have a hard time, uh, you know uh,
I mean, what really fascinates me, the all the problems that you are talking about, and yet the company, economy is growing at 6%. The message I'm getting is, if we really could address these problems, probably we would be easily able to grow more than double digit, probably 10,
quite easily
12%
quite easily
real
so
growth rate.
so just take this into consideration. Our labor force is growing at 4%. We could easily harness 2-3% of productivity led growth,
Right.
and then another 3-4% of investment led growth could
Easily
easily
kick
be
in.
accommodated if we can just guarantee uh, to solve all the primary energy problems we have right now. And if we can create a very level playing field and very good, if we can just take out all the entry barrier for the entrepreneur, then we would see that the economy can easily grow at 10% rate. So the energy problem is a big problem, which is actually constraining business from expansion, or from entrepreneurs to go into the new projects, because there's not enough energy. And then the skilled labor force problem is always there, and it has its own solution, of course. People can go into the real job, and they can learn things on the job, right? But we need to find a more systematic solution to that problem over time, because that's not how we can really move up on the ladder to become a mid income, or now we are exporting all the low ended products. We need to move on to the more value added product segment, so that we can survive in the more competitive global marketplace. So for that to happen, we need to improve our competitiveness. We need to build army of well-educated and trained professionals across the sectors.
I think there is a sense of complacency within the policymakers when they see that countries like US or developed world are growing probably 2% rate and we are growing at 6% rate, and they think that we are doing much better. But our reality and their reality are probably vastly different, and that is probably not in consideration in among many of the policymakers that we have. So I think we have digressed quite a lot from the original question. I would just like to get back to that. Where should the savings? Why should the savings be going into stock market right now?
Because the alternative asset classes are not doing enough primarily. For example, if you look at where do the people park their money. So traditionally it used to be bank deposits and then real estate. These are the two traditional
Right.
sources, right? So the bank deposit rates have really come down a lot. So it's 7% rate per year, 1 year deposit rate, 6 to 7% rate, where the annual inflation, I mean, the CPI basket inflation is 6%. For the middle class, I think the inflation is no less than 8 9%. So you have real negative
Right.
interest rate, right, for a middle income, and then the drag of taxes there always. Real estate is not doing great either, where the rental yield is in a range of 2 to 3%.
Right.
I mean, in prime real estate areas, where if you can own some commercial real estate at a much better price, then the story is a bit different. But even with that, the rental yield is not more than 6 to 8%. Even that's the best kind of rental yield you
Scenario.
can get. So with that kind of return, I don't think the real estate is poised to attract more resources going forward. So the only place where you have limited or you have a reasonable downside and a much better upside is equity, is stocks, because most of these companies are doing well. I mean, in terms of earnings growth, if we take into consideration the historical development, all these top-notch companies that are operating in Bangladesh for very long time now, I mean, on average, these companies' earnings grew by more than 15%. That's a conservative estimate. I would say that no good companies are growing at less than 20%. So with that kind of earnings growth, if you can invest in the right
Names.
moment in the cycle at fair value, I think you can reasonably expect 15 20% return over very long time, which is a great compounding return generating asset class we can recommend to our investors. So I think equity has a much better upside, which is also reflected in some of the stats. Like Bangladesh as a frontier market used to be just 0.8% of the MSCI Frontier Market Index in 2010. From there we have more than 6.5% allocation of the frontier market index into the country. So the investability in the stocks have increased. The performance indicators are good, but we have to be cautious about the valuation and of course in terms of selecting the names as well.
So you talked about the valuation. You just touched on that, and that's where my next question comes in. Where are we right now in the market cycle? And is 2017 the beginning of a new cycle that we are entering, or are we in the middle or end of the relatively bullish cycle that we have seen in last 3 4 years?
I think only time can tell about that with a very high conviction. But I think there are few indicators that we should be focusing on to see how the market goes around in the next 2 3 years. So we had a crash in 2010,
Right.
and from 2010 and 2012 nothing was happening. So the market went down significantly. There was not enough participation from our institutions, mostly from banks, because of their regulatory reduction of capital market exposures. So in 2013-14, we have seen influx of foreign capital that
Right.
that came in and corrected some of the valuation of the well-regarded companies that are there in the listed universe. So from 2013 onward to 2017, we have seen the foreign ownership of these most investable companies increased very, very significantly.
Right.
So most of these companies are, you know, majority owned by, I mean, in terms of float capital, majority owned by foreign institutional investors. So from 2013 to 2017, we have seen a correction, of course, upside correction,
Right.
where the valuation of good quality companies caught up and returned very, very significantly to the investors. But from now to go forward, I mean, I think two, three things need to happen. One is that we have seen the banks underperforming for a long time, both fundamentally, I mean, balance sheet quality wise and stock price wise. So I think from 2016 onward, we have seen that the banks stocks have done really very well, but I have a lot of doubt whether the balance sheet turnaround case has already been done. I mean, most of this, in my view, most of this stock price euphoria is not justified. So this will fall in places over time going forward. But a number of banks that brought in qualitative differences in their business will continue going up because of the increasing difference in terms of quality and business mode. So I think banks are not out of the challenges yet. In fact, most of the banks have gone down in terms of their fundamentals. The primary problem is the lack of governance. So the individuals that own these institutions put their own interest before the interest of the institutions. We need to see a change to that, be it regulatory enforced or voluntary ones. We need to see some change in that. So the number one thing is the turnaround in the banks in terms of their fundamental performance,
And
which,
that's driving the market at the
yeah,
moment.
that can create a lot of ripple effect in the whole market. So the
Okay.
banks, think about it. If we have more than 30 listed banks, if all these banks can, uh, sustainably cut down their non-performing asset with the balance sheet expansion of 12-13% per year, then within 2 years you'd see a great momentum being building up in the stock market, both in terms of their own stocks and both in terms of the appetite of the banks to invest in the stock market, because still they are the main institutional investors of the market from local perspective, right? So I think the bank's performance had to improve from this base going forward to see the next cycle coming into effect. And the second point is we need to see the political and security situation. It has improved a lot over the last 2 years. We need the sustainability of this well into the next election and beyond probably. And the third thing is that we need to see some catalyst from the performance perspective as well. The companies that have done really very well over the last 5 to 10 years, they need to they you know the market will continue to validate the valuation with the earnings performance going forward. For example,
Right.
what happened early this year, we have seen in first 2 months, I mean January and February, the market was up by 12-13%.
Right.
And then the December end quarterly results started coming, and we saw that some of the earnings were not up to the mark. So the market corrected them accordingly.
Right.
So the market will go up and will try to find validation points from fundamental performance perspective. And if there's no such catalyst, then the market performance would not sustain. So I think the corporate earnings need to support the market movement going forward. So these are the three catalysts. One is the banks need to turn around fundamentally. The financial institution need to get out of the negative equity problems they had and all other asset quality issues. And the second thing is we need to see the political and security situation to remain stable. at least not deteriorating from this low
From this
base.
point.
And the third point is we need to see significant improvement in terms of earnings performance of the
Listed universe.
of the leading, of the blue chip stocks.
Okay. Okay. Uh, Currency definitely plays a crucial role in foreign portfolio managers' decision in investing in a country. So, what is the current currency dynamics for BGT, Bangladeshi Taka, and whether you think the current pricing of the currency is competitive from other comparing to other countries' currencies?
So I'm not an expert on the currency valuation, but for just by looking at Bangladeshi Taka from relative currency perspective, I think BDT is not helping us gaining competitiveness in the export market. So all other competing economies have devalued their currency significantly. For example, if you look at India, China, Sri Lanka, Thailand, all these currencies have lost their value against dollar, which gave them more space in the export market. So Bangladeshi Taka has remained very very strong because of the very strong current account balance situation, and for other reasons. I think we need to see BDT to devalue to some extent to gain more competitiveness in the export market, because too many things happening at the same time during the 2013 to 16 this time frame, because we saw this tragic event at Rana Plaza, which triggered great industry consolidation, which is taking the smaller non-compliant players out of the industry, which is not very easy thing for the industry to accommodate with. So I think at one side they are struggling on their own operation and business, and on the other side, the macroeconomic tailwind that would help them was missing. So instead of the last round of currency weakness we saw in 2011, so there was no real depreciation of BDT in the last six years.
We are seeing some sort of depreciation playing out in this year too, right?
Yeah, but it corrected. So we saw the hike to touch
83.
85.
Oh.
So 7% devaluation YTD at one point this year in 2017. But you see what happened afterward. So the central bank intervened, and they make sure that none of the LCs get settled beyond 82 taka. So it's sort of cap market. So
Right.
that triggered the correction ultimately. So now taka to dollar is 80 taka, 80.5 taka. So I think it has more space to give some comfort to the exporters, and we economic policy wise, we are not import substitutional focusing country anymore. We are export oriented country, so we need to keep that in mind in terms of economic policy making. So
Help me understand this. We are a net importing country, right? So if we devalue our currency, we will definitely also increase our importing cost too. Why is devaluation has such a compelling case despite the fact that we are a net importing country?
So I think we need to look at our whole duty structure very very carefully. Our imports are very very expensive, not because of the exchange rate, but because of the supplementary duties and things like that. For example, a car in Bangladesh is taxed at 200 to 300%, right? For example, oil, take for example. So oil we are importing at a much lower price cost right now, but we are selling in the open market at a much
Much
higher.
higher price.
So the the point I'm trying to make is that our imports are expensive for the end users, not because of our currency related issues, but because of because of how we structure our market. So the duty structure is very much on the upper side, and the number of intermediaries in the middle from the importer to the end user is too many. So that's why we have a huge gap in between the importing cost and the ultimate market selling cost. So I think that needs to be addressed, and that's not going to happen in next 2 3 years. But I think currency competitiveness is a very important issue for Bangladesh, because if you look around, you'd see that it's just currency war. All the other countries are just devaluing their currency just by printing some additional money every year, taking some more dollars into their own hand. Uh, so I think this is very very important for Bangladesh going forward to keep a stable mind to address these things over a long time.
You have already touched on the demographic dividend part in the beginning of the discussion, and in many part of the developed world, pension liabilities and social benefits coverage are a hot topic at this moment. Uh, when the demographic dividends will expire in Bangladesh and the growing aging population will kick in a significant manner, possibly in next 2 decades, are we planning well to tackle such developments? And if not, I think the answer is no. We all know that. How exactly should we prepare right now in 2017 to help us tackle the situation that will probably kick in next decade or two?
We are not well prepared at all. In fact, we are not even thinking to take any preparation at this point. So think about I was talking about the negative social transformation. So think about the first generation of wage earners that went into Middle East in early 80s.
Right.
They are retiring and they are coming back to the country. And what have they got in the country so far? I mean, all their investments, the money they used to send back home, you know, there's very little value for that money to them. I mean, the wage earner themselves, because the culture is like that. One person will work and his brothers and the whole family will depend on that guy. So there is no such wealth accumulation in effect. And whatever investment being done in the form of land, we have seen that the real estate and the land value has gone down significantly. So these guys, the first generation wage earners, are coming back after 30 years of hard work in Middle East with chronic kidney diseases. They have real disconnect with their families and friends, and they have no real assets to live on for the next 20 years, 10 to 20 years. So this is social stigma, I'd say, and this is setting a very bad stage for the upcoming challenges we are going to face. So if you just focus on the local side of things, I mean, we pension is not a problem that is there in our head so far. So we are not even thinking about it. So now, very recently, government has started discussing about it, and they are actually taking some of the steps being taken was very positive, but these are not very easy to manage. For example, the pension benefits that the government
These are
service
defined benefit
officers,
plans,
yeah,
right?
these are mostly when the rest of the world is working out of defined benefit plan, we have just walking into it in a big way. So I'm just citing few examples. Before entitling into a defined benefit plan under Bangladesh government, as a government officer, you know you would need a 10 years of service life before, two
Right.
years back, and now you go into that with just 5 years of service life. And if you just compare the before and after the new pension act, you see the huge difference, which would amplify the pension liability
Liability.
for the government. Yet we don't have pension assets, any pension assets. What we are doing, we are actually giving budgetary provision for pension liabilities. There's no pension funding strategy so far. So there's no coherent, investment activities going on to face the pension liabilities that are going to emerge 10 years from now. I'm talking about the government institutions itself. Now, zooming out on the private sector, there's no pension plan. I mean, the gratuity and all the other
Provident
traditional
fund.
provident fund related things, these are not really. In fact, there are very few companies that are offering this at the moment. Most of the companies even don't pay bonus timely, so we cannot ask for that. So what we need to see a government sponsored pension system for all sort of employees, both private and public. And without that, with this little social security and things like that, I don't think we will be able to move towards the right direction in terms of harnessing demographic dividend, in terms of securing people's life and giving long term good quality living standard.
I mean, the recent initiative that has been taken by government can be a very precarious precedent for the upcoming pension liabilities that we have talked in detail about the macroeconomic part. Now we'll delve into the telco sector, being a being the fact that you are a telco analyst for quite some time in Bangladesh. I would just like to start our discussion regarding telco sector with with the fact that many of us feel that the telco services are expensive in Bangladesh, especially the data part. I would love to know in detail whether you also feel the same compared to probably other countries, whether our data is expensive.
So in terms of voice, there's one just to start it. Bangladesh is the second most cheap market in the world after Sri Lanka. So the average price per minute is as low as 60 paisa on average. I'm talking about the operator that is providing the best quality network, right? So in terms of data, I think we have some challenge. Data is not as cheap. Definitely, we are not one of the cheapest, but we are cheaper than many other countries in our footing. But data could be much more cheap. Data is more expensive because one is the regulatory kind of payment process we have. For example, we have to pay, 15% VAT, 5% surcharge, so 20% regulatory cost on data upfront, which is, in my view, is not really justified. So the tariff structure that applies in voice should not enforce in the same way in data. And then we are not actually there are too many middlemen in the data whole data
Pie. Value chain.
Right? So there are too many players and they are all having their cards, so that is making data more expensive. And the third thing is that we could not generate the economies of scale. For example, the submarine cable that we have got, I mean, we are not even using 40% of it. So because of that, the fixed costs doesn't get allocated over the
Larger.
investment cost, right? So I think, as the ramp up happens, I mean, in terms of utilization, and if we can see some regulatory tariff restructuring, and then I think, data can become more competitive data pricing. But in my view, we are still on the expensive side of things in terms of data, because most of the people in the country are rather small packet user. I mean, 1 GB, 2 GB users, and their data pricing is much more expensive than the ones that are using large volume. So I think, we are in terms of affordability, it should become more affordable going forward in the next 3 years, and I think it will move towards that direction. But the higher volume of it, I mean, the elasticity effect will more than offset the cut of the data pricing for the telco operators.
Will the introduction of 4G and other technologically advanced services would rationalize lower data price points going forward?
Depends on the modality of 4G auction. So if there is a separate license, if the the mandates are given at a with a very high licensing cost, then the sweet fruit of 4G will not be distributed upfront to the end users, like just like the case of 3G.
3G.
But I think, yeah, that's the answer. So it depends on what are the terms of the 4G auction. But I think 4G over 3G will not bring a huge difference in terms of costing, but in terms of quality, we would have a very different experience. So again, this is targeted to someone who is a voracious data user. So they would get much better speed, and they would get much better value for their money. But I'm not really sure for the rural guy, for a village guy who is using 1 GB data for basic internet service access. So I think here the so in Bangladesh, the telco operators cannot give fixed lines, which is very different from how the other markets work. So if you look at the whole internet access market in Bangladesh, there are very few players beyond these 3 or 4 telco operators which can go and offer service to a significant portion of the population. So one reason why data is expensive in general in Bangladesh is because we couldn't create the competitive industry in first place, because we have given the WiMAX licenses at very generous terms. But now look at the industry. I mean, the two players are merely surviving.
Right.
None of them are actually thriving very well. So we need to see some new competition coming in, be it in the form of fixed line or in the form of WiMAX or whatever. We need uh, to get better data service in terms of price and value. I think we need to see more competitiveness in the sector. So the regulator will definitely look into that matter, and we need to see why the WiMAX operators went wrong in a big way. I mean, we know the issues. All of us who are familiar with these corporations, and the regulator need to work around that. Otherwise, the WiMAX will remain weak. The telco operators will continue to enjoy 80-90% market share in the whole internet subscriber market. And with that sort of market share, you do not see that much of aggression in terms of competitive pricing and offering the best kind of services. So I think the whole market has to be thought twice. So I would like to see mobile operators being allowed to offer fixed lines, because that is very much the case in other markets.
Right.
And the service quality, the price plan would be very affordable for most of the people. Now,
Why are not they being allowed to do that? What's the rationale for government?
I think I really don't know what's their mindset, but my hunch is that they are thinking that they are already too big and they are already doing very good. I mean, which is the case. Grameenphone is a $6 billion company almost. So they are already very big. They have already been given a big pie of the market. So the government is rather trying to develop some other players, giving specialized licenses to them.
But probably at the expense of the consumers.
Probably, but it's okay if it works that way in the short term. For example, the WiMAX licenses were given at a much better terms. If they could roll out in a right way, then they would already be able to offer very competitive prices, which is not the case because of the kind of investments they did was
Can you
not
just
probably
briefly
right.
shed some light on the issues that the WiMAX companies have faced uh, in their data services?
My understanding is that there are two players in the industry right now. One is Bangladesh. They have invested very aggressively in a technology which was going obsolete at that point of time. So
Okay.
so it's like big base stations and things like that, which did not really pay out. So that is the case for the Bangladesh, and the sponsors don't have deep pocket. They had their issues. I mean, the sponsors were had very good experience in the RMG sector, but in the technology space they were relatively new and inexperienced, and they had their financial constraints.
What
So,
about QB?
and for QB, I think it was a joint venture between a Netherlands-based company and some local sponsors. And at one point of time, this joint venture, I mean, both the shareholders, the relationship soured. So they could not continue to invest in the company because of this souring relationship. So both the sponsors, both type of shareholders are trying to take the control of the company, and they are not investing enough.
Given the addressable market that there is for the data services, why don't we see an upcoming company trying to venture into this market? What's stopping them?
It's not easy. The regulatory side of things, you cannot, just because you are good at it, you will not be able to get in entry, because the regulatory licensing procedure is there. And in terms of merger and acquisition, we know that in Bangladesh it's not very easy. Even the companies would rather bleed to death than giving
Merge it with someone
merge
else.
it with somebody else. So this is the general experience we have in Bangladesh. So I think there's a big vacuum there for sure, and I think it will be addressed by over time. This will be addressed, but now there's a big vacuum, and that's why probably the data pricing is not at a range where we would like to see it.
Okay. I know that Grameenphone is the only listed company in the among the four largest telco companies in Bangladesh, and we could the numbers are definitely as a public company. It's the disclosure that they have given. We see that their EBITDA is probably the highest in the whole region, not just in Bangladesh. And so we'd like to know why exactly is this the case? What our understanding is, the market is fairly competitive, these four companies, and still why would Grameenphone enjoy such higher EBITDA margin in this sector?
Right. I'd first start with the why this sector is doing well, and I think we should all thank the government of Bangladesh for developing the telco service the way it is right now. So if you remember, there's one in '96 when these three licenses were given. The For the first 15 years, the spectrum was given for free.
First 15 years,
For
right?
for first 15 years, the spectrum was given for free. I mean, this is a huge support that the government gave to this industry, and which is the reason why we have seen this rapid development in this sector. If you remember, in '96 we had hardly any phone,
Right.
and within 2001 2002, I remember everyone used to have a phone which had the capability to call another cell phone. And then 2003 and 4 we had all through connectivity, right?
Right.
So I think the government has done an excellent job in terms of developing this sector. Even today, if you look at the competition, there are four players, which are three of them are profitable EBITDA wise, and the competition is healthy. Of course, there are room for improvement, but you would not see this kind of industry structure in other markets. For example, in India, it's all screwed up. So no one is making money. For no one is healthy situation. Everyone is, So when there's too much tension in the industry, then the ultimate victim would be the end customers, right? So in Bangladesh, I think we have been able to keep the price at the lower end. We ensured that the value for money thing is on the table, and the operators have enough on the table to make the case as such. So Bangladesh has done very, very well, and now just focus on why these companies survived with this high profit margin, even with the lowest kind of prices. One is the density of the population. This is a big thing. So by putting one BTS, Grameenphone can companies like Grameenphone can generate 5 times the revenue they can generate in India, for example, right?
Okay.
Because we have too many people around one BTS who can use that, and the resource utilization is very much up to the optimum level, right? So one is that. The second reason why Grameenphone in particular had a very high profit margin is that they have 46% market share, SIM market share, and most of their calls are on-net calls, meaning a Grameenphone user is calling another Grameenphone user. So when this sort of call is happening, there's no interconnect charges.
Right.
So just to put things in perspective, a on-net call is 15% more profitable to an off-net call.
Okay.
And since they have more on-net calls, they have a better profit margin. And then the other issues I've mentioned, that the spectrum were given for free and the spectrum prices were reasonable in the subsequent round of renewal as well. So which has given the operators more breathing space. In terms of revenue sharing, in Bangladesh, BTRC is sharing 6.5% revenue with the mobile operators, which is not that much in comparison to the other Asian markets. So the regulatory cut is not that much. All these things coming together, I think these are the drivers why the companies have such better profit margin relative to the regional peers.
With the emergence of data, I think another perspective that probably comes simultaneously is whether whether the voice itself has any future, and can this voice business remain as profitable as it is now for the companies in Bangladesh?
I think voice is profitable, but the concern is in terms of growth, right? So I think.
And you think it will remain profitable?
I think it will remain profitable, not up to the indefinite future, but for the next. If you just take a 10-year horizon, the reason why I'm saying is because the concept for Bangladesh, the telecommunication connection, the concept was still, if you go to a rural district of the country, you would see that the idea is to have one cell phone for a household.
Right.
But cell phone is a personalized solution, right? So that is still on the happening, right? So historically in urban areas there used to be one connection per household, and now we all have phones. The same thing will happen in village. This is one driver of organic growth for the sector. The other organic driver would be, as I pointed out, that the 4%, our labor force is growing at 4%, meaning that 4% people did not have affordability to buy a cell phone for themselves. But every year, the number of people that have the affordability to buy a mobile phone is growing by 4%. So I think that, for other market, the population growth rate is the driver. But in Bangladesh, population growth rate is just 1.3%, whereas the labor force is growing by 4%. So Bangladesh base subscription growth rate would be 4% in my view. So if you take that, and add as I pointed out, the urbanization and the other things will drive at least 2 to 4% additional growth. So 6 to 8% subscription growth is like the base for the country for the next 5 years at least. Okay. So only time will tell, because technology changes very rapidly. So in 5 years, I think 6% growth rate, subscriber growth rate, is very much reasonable. And then if the pricing side of things stabilize, if it doesn't go, because voice is already very cheap, right? Affordable. So if it doesn't go down in a big way, I think 5% CAGR growth rate for voice is very much the case for next 5 years. Since we are calling voice as a sort of matured segment, 5% growth is not that bad in a deflationary industry. What are some of the biggest challenges that you see for the sector in next 5 to 10 years? Among the challenges, one is of course the regulatory side of things. There are unsettled claims, there are disputes that needs to be settled. I'm talking about from minority shareholders' perspective. Right. So I think with much better visibility on those disputes, the stock price would be much more efficient, and we would have much better visibility on how the company is going to do financially in the next 3-5 years. So regulatory challenges is very much there, and the regulator is to some extent, is in countries like Bangladesh, they sometimes venture into the uncharted water, which is not a very good experience for the operators. So I hope that the industry will sustain the kind of regulatory support it got so far. But the regulatory challenge is very much there, and also, the one big catalyst for the industry would be, if these telco players uh, are given a wider mandate to do different things in relevant sectors, such as I talked about the fixed line, fixed internet service. One extension could be digital services, such as the digital television can be one big area where they can come in. Mobile financial services can be one great area where they can come in and improve the sector overall. Um, and of course, in data, they can, the optimization has not really happened. For example, the idea of public Wi-Fi was not provided in the 3G licensing agreement. So the mobile operator cannot go and uh, provide comprehensive coverage in a area. For example, in Dhanmondi, there will be a Wi-Fi, a public Wi-Fi provided by companies like Grameenphone. Anyone having a set can just plug and play, and the subscribers would be paying on a monthly basis, irrespective of where they are using their Wi-Fi services.
Right.
So these sort of things were not provided adequately in our 3G licensing agreement. I think, if these flexibilities can be brought in 4G, or in the next round of regulatory discussion, that would give more flexibility to these companies to give affordable quality services to the end customers and monetize for it. That would really help them to grow, um, by ensuring win-win situation for all the value chain players.
Is Grameenphone a matured company, or is it somewhere in between growth and maturing stage at this moment? And how would you value such company?
I think Grameenphone is not fully matured yet, because we are in an early growth phase of data market. So the data growth was last year in more than 60% year over year growth rate. This year, I think we have more than 50% data growth, even though data is just 15% of the total revenue. But I think within 3 years time, this 15% can turn into 30, because the smartphone phone prices have come down significantly. So people, and the traditional entertainment sources are not there anymore, at least. So the Bangladesh based customers are enjoying digital services on platforms like YouTube, Facebook, and these are very, very popular in the country. So at the moment they have affordable handsets, there would be traffic flow for these data service providers. So I think, data revenue as percentage of total revenue would be more than 25% in 3 years time. That means a massive growth for data is due so I'm refused to call Grameenphone as a mature company, because they have unexplored opportunity in the data and other digital service areas.
So you have two segments of the business. One is voice that are probably not growing at tandem with the the average economic growth, and you have data, who is probably rapidly growing, soaring every year. So how do you value such company?
So I think I value Grameenphone as, in terms of EV to EBITDA multiple, which is a very traditional metric for the telecom service providers. Because the company, if you compare assets regionally, there are too many differences in terms of depreciation, interest, tax rates, things like that. So if you adjust all these things then you have the real metric is EV to EBITDA, and I think it's the real reflector of the value on the table for this for the shareholders of these companies. So I value Grameenphone based on the free cash flow. I think we have their operating cash flow is very much predictable. in absence of any regulatory hiccups, which
Right.
are by definition not
Not
so
predictable.
predictable.
Hmm.
But the core operating cash flow is very much predictable, and then the capex cycle is also very much predictable, because they are investing steadily. There's no certain peaks in certain years, so they're investing gradually over the years, and there's no regulatory capex anytime soon. I mean, the 3G and 2G licenses were just renewed and received in 2013. The 4G auction is due. I don't think the capex would be very much on the higher side, but it can be something we have to look for it. So you have very much visibility cash flow wise, so where they are standing in terms of free cash flow.
How
So
many years do you forecast
I
cash
think
flows?
3 years of detailed forecast for free cash flow, and then
You
you
just
have,
multiply it by
yeah,
EV to
EV
EBITDA.
to EBITDA, and then whatever comes in, that's the real value indicator for the company. And the other thing is that, so Grameenphone is already a discovered idea, so everyone knows everything about this
Right.
company. So I think it's important for the investor to look for, or for the analyst to look for the things that are being overlooked. For example, sim tax was one big area where many of the analysts were not actually missed the idea. For example, sim tax as percentage of revenue has come down by 10% over the last 8 years. So this was a very big driver of margin improvement or stability over the years, but very few people talked about that. And I think going forward, few of the things will come into play. Digital distribution of minutes, or digital solution for top ups. This will come into play, which will cut the distribution commission as percentage of revenue. And this will improve margin further. And as data play ramps up, this will also opens up margin opportunities. So I think Grameenphone has a lot of scope to go and touch 60% EBITDA margin. Even
What's the
big,
current EBITDA margin?
so it's around
56?
57%.
57.
57% on average, but it can go easily to 60% given the kind of
In next 3
operation it
years.
has. I think it's very much possible in 2 years.
Okay.
But the thing is that this has to be believed in by the management that they can go and do it. And it's also, the P&L is all about balancing in between present and future. So if they invest very, very aggressively for certain reasons, then it can have an otherwise impact. But I think what generally missing in the company is a continuation of senior management. For example, the CEO and CFO gets changed in too frequently in my view, and the soul of smaller company is missing. So you can be big, but you have to have a soul of a small company, because
Right.
to foster faster growth and to go for certain things that the other players
Not doing.
are not doing, right? So Grameenphone is not doing that at the moment. So I think over time they
So you
can.
think they lack the right kind of aggression that probably a smaller company would have?
Yeah, I think so, because they have grown big. Maybe there are justified reasons behind that, but I would love them to see in a big way in some of the segments. For example, Grameenphone doesn't have a very strong foothold in the youth segment, in the SME segment. So think about it. The company launched their D-Juice brand. Uh, you know, they were the pioneer, and then they lost their traction. Uh, they Banglalink is doing an excellent work in terms of SME subscriber, reach out program. But Grameenphone doesn't have that kind of thing. The business solution program that the company has is not very effective until very recently when they launched their app. So I think there are lots of areas where the soul of a smaller company could bring in much better growth and profitability.
We are into the final stage of the conversation, and I'd like to ask you, what are the filtering criteria that you look for while selecting particular stock?
It's not really my filtering criteria. It's like
Mhm.
our team filtering criteria. So while looking at a company, we look for certain things. One is, of course, the integrity of the management and the governor. Directors,
Mhm.
sponsors. Because we believe that we are not the ultimate asset manager. The ultimate asset manager is the
Right.
management and the board. So if you don't have right kind of people in mind and right kind of thinking in the management and board, then the investment will not do a great work in terms of generating sustainable long-term return. So we look for people that who understand the business, who are there for long, who understand the critical issues. From our perspective, of course, they know it much better themselves, but we need to have a peep into that thing. So that's one thing. And then we like the industry leaders more than the others. For example, number 1 2 players up to number 3. So I think in countries like Bangladesh, you know the good are very good.
Okay.
So if you look at the market shares of first 2 players, you'd see in different industries that there's a very big gap because the good are very good. So I think we rather focus on the number 1 player in a well-defined market where they have reasonable moat and control over pricing power. This is the other thing we look for: the pricing power, how much control do they have on their own uh, top line growth and margin retention. The third is cash rich companies with low debt, because I think that's a very strong indicator of quality in the management and overall business thinking. And that also ensures that the company is focused on distributing earnings as cash dividend, which is very important in my view. So these are the few things we look at, and of course the valuation has to be in the right kind of zone, which varies from
Company to company.
company to company. Yeah.
Right. So the final question for you is how would fresh business graduates approach their career or individual growth and skill sets in Bangladesh?
I think I was not a great graduate, so I can give you only my perspective that in Bangladesh the way business is taught is not probably the ideal kind of approach. It's like a cricketer is trying to understand the measurement of a bat to be a great batsman. It doesn't work that way. He needs to be in the middle of the pitch and needs to
Right.
practice hours after hours to become a great batsman. So I think uh, the business graduate, to develop a great business common sense, I think you have to go through the stories. Very few people read a lot about the developments of different companies in Bangladesh and outside in the world. For example, very few people knows about our great entrepreneurs, great corporate leaders, great CEOs. Very few people knows
Right.
about them, and it's not taught in a big way in our business school either. We have our great stories. For example, yesterday I was in the Dhanmondi Abahani Mart and I saw um, a tea staller was selling bottled, what do they call it? I mean, tang, a bottled tang at 10 taka. So the idea was, the school going kid used to play in the field. They look for, the cold water, but and they also look for carbonated water, soda,
Right.
which are in the price range of 15 to 18 taka. So what he does, he has this,
Product
filtered
somewhere in
water.
between.
Yeah, filtered water which costs him 1 taka, and then he keeps it in the fridge and mixes some tang, which is a 5 taka a packet. So he produces a great product for his customers. So I think these are important. You have to look for these sort of ideas, because idea is the commodity in this century. So all these big companies started their journey in garage, and they are taking over the world right now. So I think this entrepreneurial mindset is very very important for aspiring business graduate. He is interested in the financial service sector, or he is interested in marketing. That is very important. So I think a general tendency to study the companies and great thinkers in business domain is very important. So reading is a great you know uh,
Habit.
habit to have. um, and then a few of the things that I think will emerge very necessary over time. One of them is a programming ability. So we must learn some programming language, and we need to network with the right kind of people, because in Bangladesh you will always have distractors. So if you are in the wrong cycle, your priorities would change. Um, so I think the networking with the right kind of guy is very important. So these
To
are
have
the
some
two
sort of
three.
mentoring role.
Yeah. So I think the idea of mentoring is still missing, but you can get a flavor of that by talking regularly to the like-minded people,
Right.
who will try you to take you to the next phase. So I found it very helpful for myself. I had big deficiencies. I did not have. I still don't have great skills, but I think just by talking to good guys with a lot of knowledge, I could pull out myself out of the out of the hole. So I think these are the general directions that I can give to a younger version of myself. And also I think going out for an international program is can be a great help, because we all lack the global view. So we don't know how big the world is. So
Right.
especially our business graduate miss that point in a big way. I'm talking about the average scenario, not for the toppers.
I understand.
So I think if they go out for some sort of study for 1 year, I think that would work like an eye opener. How big the world is, how big the opportunities are, how challenging it is to survive and do well. So I think this is very important at the early stage of the career, because that can really pull someone in a big way.
Ali bhai, thank you. We have elaborated your thoughts, ideas, and insights to our listeners. Thank you so much for your time.
Most welcome. Always a pleasure talking to you, Rizwan.